bit, talk about investing and staying focused. So generally, in the past, U.S. stocks and bonds don't move in tandem. This chart says rarely move in tandem, and that's true. When you look at this, the dark blue bars represent the S&P 500, and the light blue represents the U.S. Aggregate Bond Index all the way back to 1997. You can see there was very little correlation in the movement. When stocks were doing really, really well, bonds were doing okay, but not great. When the stocks were down, the bonds tended to be up in the past. Go all the way to the right side of this chart and you can see the type of year we've been having. We've actually had the rare movement of stocks and bonds going down double digit in the same at the same time in the same year. So that's kind of forced us into changing kind of the strategy, Dan, of working with portfolios where we're using cash as an asset class,
right?
Because you can't switch over to bonds and try to stabilize the portfolio and give some kind of return. This chart, this is really important for us as investors to understand that market cycles and economic cycles are not in tandem. They do not move exactly with each other. As you can see in the dark blue line here, this is a chart of the market cycles, the going up, the growth in the market, and then the tailing off and the reduction in the market, and then recovery again in the future. And when you look at this over periods of months, we tend to see the lighter blue or green line, it might be green on your screen, is a economic cycle. And those cycles tend to peak months after the market has already peaked and started to go down. We're in this beginning of this market decline. Again, what we have to be mindful of moving forward is that the market, you look at the right side of this chart, the market tends to recover much faster than the economy. In fact, historically, it's several months before you'll see the market start to recover and the economy is still going down. From an intuitive standpoint, that doesn't make sense, but that's why we talk about you have to stay invested, because this market will start to recover way before the economy does. And this is the picture we think of next year, that we're going to actually see the market start to recover while the economy still is slowing down.
Yeah, you won't feel the recovery in many cases. And this is where, when you're looking at the economic indicators and you look at this graph here, the economic indicators are looking 6 to 9 months ahead.
Yep.
So on a cycle peak of the economic cycle, and you're looking at it against the market's gonna peak before, or it's gonna actually hit the bottom before and take off before the economic cycle does. So that's one of the major reasons we're looking at all the economic and financial indicators, because they're going to help signal when we're actually at the bottom.